The most money I ever lost in the market was time out of the market, was when I stopped buying.
Rates have gone up.
Yeah.
There's talk about another rate rise potentially, right? If you can overthink the worst, why can't you overthink the best?
That Perth, don't touch Perth, purely mining, resource, man, it's still sending. If it doesn't do 20% capital growth this year, we'll cook a hat up on the show and I'll eat the hat.
G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. If you've clicked on the link, you already know who the guest is today. Big Sammy Gordon, needs no introduction. Mate, I love having you on because I feel like sometimes, the team, I've got a couple of team here. I feel like I'm intense around the team. You bring an energy and aura that I'm like, mate, we're going to sixth gear straight away. Honestly, there's guests that I prep notes for and I'll send it to them beforehand. Not with you, because the fact is we come in here and you'll just be able to go straight from the top of your head and come out with a huge amount of insights, advice, but also you don't need to be scripted, man. Like you are true to form in terms of what's in you and then what comes out of you as well. Yeah.
No, I appreciate it, man. Yeah, it's mate, I eat, live, and breathe it. It's funny. I was on a different pod this morning with another couple of blokes that I've recorded with for a fair few years as well.
You can say it's equity, mate.
Yeah, it's equity, mates, man.
Huge,
well, man,
huge.
yeah, they're massive, right? And it's funny too because I've been like 17 years. I've been doing this for. It was 2009 that I bought my first property. I've literally eat, lived, and breathed it that whole way through till now, and if anything, so much more even now than I did all the way back then. So yeah, man, I love it, and mate, going to another gear, it G's me up, doing this stuff, man.
It gets me going. I come out of here, my wife's scared sometimes when I come home. So what crazy shit are you going to come up with now? I'm like, just watch this space.
That's good, man.
That's what happens. Good. Like I think, obviously, I get a front row seat to kind of your energy, and that's why I wanted to bring some of the team here because I'm like, you get a front row seat. Lauren's a client. Actually, let me go through what happened here, Sam.
Yeah, sweet.
This is what you create behind the scenes that you probably won't be privy to. I turn up to the summit, the Star, in Sydney with my wife Bernadette, and Lauren is working for another broking firm. She comes up, she's like, I've been seeing some of your staff, had a chat, and so look, can we just have a chat about maybe our loans? I was like, let's have a chat about more. Let's have a chat about your career. Yeah. And off the back of that, a year later, she moved from the Central Coast, moved down to Wollongong, got a spot, dragged her partner and her dogs.
How good.
And it comes back to that chance, man, that we had at the summit. Like that's the magic. That's just one micro moment that happens when you pack out a room of 1,000+ people. Yeah, but the energy, the people that show up, they're wired different. We call it being built different under our roof as well. But you're built different. And that's probably where this is not blowing any smoke because I see it. Like you still turn up, mate. Like someone running a business and the sweat equity that you've had for 17 years behind the scenes, and you still keep going at this level. It's inspiring, I've got to tell you.
I appreciate that, man. I really do. And it's mad because like when we bring, different people around, investors and brokers, everything else in all and around it, man, it's like we joke kind of that it's almost like a cult, right? We bring everyone together, the energy.
What do you mean? It almost is. It bloody is.
It is a cult, man. And I think, man, like it's mad because we think differently around property.
Yeah.
The results are there to prove that the way that we talk and our thesis around property is different, and the results that come off the back of it as well. So there's a reason why I get juiced up by it, man. There's a reason why so many other people get juiced up by it as well.
Yeah.
So I love it, mate. And especially if you can bring 1,000 people in the room who all think so differently, or so many of them can think differently before they get in there. Same so often as when we get partners who come and they've like never been into it and they're like, oh yeah, fucking sit through this property seminar, and then we just go out there, blast them, go all out, and they're like, holy shit, like this is what it's actually about. It's just different, man. It's a different way of doing it. And it's like when we get there in the stage in the room, man, we don't sell. We're not there to sell. It's the same as the potties, man. Let's just sell to educate. You know what I mean? And like the more educated you can become, the better an investor, the better you can do out of this thing as well.
Spot on.
Man, I love it. That's why I get G'd up by this thing. That's why I'm still going as hard as I am today.
Correct. And the one thing, you're always available. Like there's people that are, we try to, George is my marketing manager here. There's people that are kind of elusive, they're too busy. Mate, honestly, you make yourself very, very available to be here front and center, to then go out to our audience, for example. And for that, I've got to pay a lot of homage and respect. And hey, congrats, REB Awards recently. Thought Leader of the Year. Yeah. Probably never a doubt. Never a doubt.
Bit of a different one though, eh?
Look, it is, but I think, because I see some people like, they'll take pot shots at awards. I don't care if you're going to take people pot shots at awards and keep walking. But when you talk about thought leadership, it means there's conviction. And something that we love is like when you have a message and you're so dialed into it and you're so clear and you have conviction and it just comes out at every opportunity, every conversation, you give the same advice as you would to a friend, to a family member, to a client. So you don't see who pays versus actually I'm going to tell you this, whether you're my brother, a mate, or a client. Yeah. And so I looked at that. I was like, mate, first of all, congrats. And must just feel, not that you need an award for validation, but you go, hey, mate, we are just on the right path here. And to your team, you're like, mate, lock in. We're on a good thing.
For sure, man. It was a different one to win as well. It's funny, the girls put me up for it rather than myself with that one. And I was like, oh yeah, whatever. And then I think like when I won it, it was funny because a lot of people said to me after, like, you really deserved it on this front. And this is other buyers agency in the industry and I guess directors of their companies as well. And big names in the game as well alongside it. And then, man, they're sort of saying like you fully deserve it in all reality, man, because like what you've carved a different path. Like you do things so differently from everyone else and you just don't care. And it's the truth, but because I don't care, because I believe in it, because it worked for me. Average Australian income earner, retired myself from that. And then helping so many people in the same sort of scenarios. And it's the thing, man, we don't jump around with heaps of different strategies, all this different stuff. Like we're malleable to the market, but the strategies remain the same the whole way through. You know what I mean? We're not pivoting, we're not saying different things, all the rest of it. You know, malleable when required, but man, just still hammering the same strategy that works time and time again.
Love it.
So I love it, man. I love it.
Great. Mate, I've got a quote I want to start you off with, and it's going to make sense because particularly in a time that we're going live here today, rates have gone up. Yeah. There's talk about another rate rise potentially, right?
Yep.
Unfortunately, there's a war going on halfway across the country. There's a lot of volatility around that. There's been changes, call it trust lending, that just continues to, to fester away in the background. But the saying is, if you can overthink the worst, why can't you overthink the best? And you're a guy that probably overthinks the best. Like you probably got, to where you've got to today. So for someone listening and they're like, hey, the sky's falling on our heads, petrol prices are up, for example, interest rates are up, I'm feeling cash flow burn.
Yeah.
I can't possibly go and buy another investment property. I've already had people that email me overnight. I'm just going to pull the pin on this. I'm going to come back to that later because I don't know politely how to draft a response. And the team like, just step away from the computer, man. I'm like, I want to get near this keyboard and go, invest. So I'll start with that question and go, if you can overthink the worst, why can't you overthink the best? How do you say that without sounding like you've got something to sell?
You know what? I actually want to go back to that other thing first, because in my head, I actually can't get that piece out of my head of what you said to me first, right? Or second, sorry. So I want to answer that first. It's very simply, man, when I look at investing, like we always have to play the hand that we're dealt. The most money I ever lost in the market was time out of the market, was when I stopped buying, was windows when I should have been buying and I didn't buy. That cost me more than anything else I ever look at in my portfolio. It was not doing as much as I possibly could. Man, I look at COVID and when that came in, and I learned from my lessons in Sydney when I could have bought more, but I was hesitant. I didn't know if I could afford it. Run the numbers. You either can afford it or you can't afford it, right? If you run the numbers and you can afford it, I could have bought probably 2 to 3 times as many properties as I did in Sydney, which have tripled and quadrupled since when I could have bought them back then. I then look at when I rolled into COVID, right? And I went really hard in Brisbane and Perth. All those properties, minimum doubled. Many of them have done tripled or more in the time frame of 5 years, 5 to 6 years, right? Man, in all reality, the way I always look at it is if you can keep moving forward, keep moving forward. Like if this is your investment strategy, we can't, almost the 99.9% of the population cannot save their way out of their jobs to the retirement position they want to be in. So if investment is your leverage vehicle to get out there in the game, just understands the cost of doing business. Things like interest rates going up. What does an extra 25 basis points cost you over the course of a year? On $1 million worth of debt, it's $2,500. Right? Yes, if we see a full interest rate increase, a full 1% interest rate increase over the course of the 12 months of the 2 that have just come now and another 2 by the end of the year. Yes, it's 1%. Over $1 million worth of debt, that's $10,000 a year in interest only, right?
It's $200 a week.
$200 a week. But mate, 10 grand a year, right? But if you had $1 million worth of debt out on $1.5 million portfolio and that does 10% growth, well, you're up 150 grand. If I could give you 10 grand for 150, or if you would give me 10 for 150, we're taking that every day of the week. Every day, right?
But we're preaching to the converted, right? Because we get it.
Yeah,
like we've actually had success in the game.
But you're saying we're preaching to the converted, but you've got clients here emailing you saying they're pulling the pin on it. So are we preaching to the converted? I think there's a portion who haven't been through this yet, and they need a benefit from the hindsight of investors who have been in the game for 5, 10, 17 years. That have missed opportunities like this and had that time out of the game. And almost every time I've ever had someone that's come back to me after 2 years out of I'm just going to see how it goes, or this happened or that happened or whatever. The amount of clients that I had that pulled the pin when COVID hit, and then they're those 200 to 300% properties that I've had since then. How do you think they feel? You know what I mean? Like coming back after the fact with that. There's always opportunity to make money in the market. And I'm not talking about being wishy-washy with this and just being like, it's a fugazi, just whatever, throw your money at it. Not at all. Understand, can you afford it? If you can afford it, nothing changes. $1 million worth of debt, it's an extra 10 grand, over the course of 12 months. It's nothing in the scheme of things. Cost of doing business, keep moving forward.
Man, I think you and I you to a much greater extent is, one, you can probably a lot more glass than the average person. And to, when times get hard, welcome it, bring it on, because you get these, I call them like those fringe investors.
Yeah.
All it needed was just a 1.25% rate increase, and that tipped you out. It pushed you out.
Yeah.
I was like, if that's all it took, mate, wait till you buddy got, issues with VCAT or whoever it is, the tribunal trying to chase up rent, property repairs, changing property managers, bloody trust lending, like independent legal advice. Wait till you got all that to cover off, and all it took was a 0.25% rate increase for you to drop out of the market. If that's all it took, I have to doubt how serious you actually were.
Yeah.
And all that means is less competitors for us to jump in to the market, and there's more opportunity there. So what they say, like hard seas make great sailors, for example, something to that effect.
Well,
like
great sailors aren't made in calm seas; they're made in storms, right?
There we go.
You can't make a great sailor in a calm sea. What are they going to do? They've got nothing. They're just cruising. You become by friction and by that tension point and by being pushed to your limits. Yeah. Which a lot of the time, as you go through the journey, you will have these moments and these periods, and you just need to embrace them. I always say to my clients, you need to embrace that. That's your chance to learn and to go to the next level. And we at the start, our first 12, 24 months, first 5 properties in, probably pulling our hair. You got no hair left. You know what I mean? That probably came from this.
100% it did.
But you know what I mean? Like, man, these come through, these moments come through, and it's your turn and it's your time to like embrace and move forward and grow, or you'll fall away. And if you fall away, it's very hard to ever get yourself back on the train, right? But man, you got to embrace this stuff. And I actually had some clients just after a podcast I got dropped recently. I think it was literally a week or two ago. I literally would have had 5 different clients-ish message me going, oh man, like I was worried about the interest rates. And then I had this little thing happen with a property manager. And then we just realized like we made like 400 grand in equity in the last 12 months. And I'm whinging about, this little thing, a little thing. And they're their words to me of realizing what the whole game is for. And it's very few people that'll ever realistically earn probably over 200 grand a year. If you have 2 good properties in your portfolio and they go through a good cycle, you'll make that in a year just from that, let alone if you scale. So it's like, if this is your vehicle to get out, you just need to embrace this stuff. No one's born in the toughest person in the world. We go through shit to become stronger, and we go through shit to become tougher and more conditioned to this stuff. It's what's his name? Goggins. He always talking about the conditioning, the callousing the mind. That's all this is. Every time these things come up, it's an opportunity to learn, to get better, to figure it out. Ask questions of the people you're working with, of your advisors, and how do I get through this? Learn how to get through it, move past it, and keep growing.
Cash flow is one of those tricky ones, Sam, because you guys can do the property strategy, asset selection. You go, we can do the borrowing capacity strategy, loan side. I say the cash flow is the one piece that really sits in no man's land. I'm like, that's your problem. And it's, it's not that we're going to wipe our hands and abscond from any responsibility, but it's to say, if you're going to have any skin in this game, in the investing game, you have to then take the cash flow and put that, I guess, fairly squarely, the ball's in your court on that one as well. So someone then goes, Sam, how did you manage this? Average income on the way up? How did you manage that cash flow burn on the way through?
So I think there's a mix, right? I think I'll challenge one thing you said there of this is their problem, And the reason why I challenge that is because we can always formulate the strategy to target the available properties in the market that might marry up a little bit more to someone's strategy. So if someone is a lower income earner, we might not be putting him, into regional Vic into Vic with a 3% yield or a 3.5% yield on an asset worth 700K, right? They're going to bleed out in year one or come very close to the wire. So what else could we maybe pick up for that client that's maybe 5 grand a year negative versus 20 in today's market? And I think that's really the only thing I would probably challenge a little bit on that side, because that's something we definitely can help with from that front and be strategic around. I think that's the portfolio is always going to be strategic. It isn't always just going down the one avenue. But then, the other component of it, again, are you saying like how can they sort of embrace that side or like figure that piece out? Man, I think again it comes down to like figuring out what can they realistically put aside. And again, let's say it is 20 grand a year that they put aside for the portfolio. And that is a large amount of money. But sorry, the question to you, me, was how did I do it with my own portfolio? Man, at the worst, I think I got my portfolio dropped to about 25 grand a year negative. And when I bought my first property, interest rates was 7.19%. I remember the day that I settled, interest rates were going through these rises, and the day that I settled, I remember it, man, because I was in hospital in Melbourne. I just had hip surgery. That's why I hate Melbourne, because the only trip I ever went down there for was when I got hip surgery. And I remember it, man. I was in there and my property was settling that day. So it was the day after surgery. And as it was settling, they did a rate rise. And I was with ANZ at the time, and they jacked their fixed rates up. But my parents in my ears like stressing me that it was going to get like 20%. So I fixed it, and it was fixed at 7.19%. And anyway, just that was a side story. But like these are the things that happen in the journey, right? And man, as I grew the portfolio, got bigger and bigger, the most negative I ever got to was that negative 25K. Man, I was probably earning like 75, 80 grand a year at the time. So in late 20s. 2017 actually would have been. I remember because I ran the numbers and I was like, I can't actually buy any more because with my net, what I was actually making net after expenses.
That's what I was going to say, 75, 80 grand gross.
Man, I was like pretty much cutting it fine of like living expenses and being able to, and what it was costing me to hold the portfolio. And that's where I pivoted. Like I was in a good place at the time where I'd had a lot of growth in my portfolio. I sold the first property I ever bought, which is a 2-bedroom unit in Wollongong. I sold that. I cleared, I think I sold it. I made 250K profit. I think I netted, it was 250 on the dot. It was a 275 purchase, 525 sale. I think I netted about 220 because there was a portion of that was under occupied. And then I rolled those 2 deposits into 2 cash flow deals. So I bought a unit block, fully renovated it, and then I did a little house and granny dual lock sort of style build, right? When I did that, the portfolio turned from about 25 grand a year negative to around about, I think at the time, because I cut my most negative property, they gave me a huge injection, and then I rolled it into these 2 cash flowing assets. And it was like a 60K turnaround because the 2 of them were about 20 and that one was about 20 negative. And when I went through that, it made me really realize like how important it was to really balance the cash flows, which I hadn't had as big a focus on the whole way through. And at the time I was about 7-8 properties in the portfolio, I think it was. But I had to carry that level of negative cash flow through the growth markets that I did to be able to take the next steps, right? And the next run, which for us these days is rolling into say commercial rather than residential cash flow. But they were the necessary steps that I needed to take to get through and to build a $2.5 million portfolio at that time. And man, I think I got no regrets. Actually, it would have been bigger than that. It would have been maybe a 5+ million. This is a long time ago. It was 10 years ago. And that's just understanding, man. It's the cost of doing business, this stuff. And I think embracing and understanding how much you need to put aside and then make sure you're forecasting for that. Don't be silly with it. Don't be flipping with it. It's a very important piece of the process. And then, yeah, man, just keep moving forward. How do I keep acquiring? What is the correct assets going to allow me to keep acquiring, keep pushing forward? What I did do after a few builds and a few deals that were a little bit more like that, this is earlier before I did the sell down, was I was targeting lower price assets in areas I thought were going to grow well that had really good rental yields. So that sort of allowed me to kind of push from, I think, properties 3 to 7. And then that's when I need to sort of take a step back. So it's understanding what properties you still need in the portfolio now, what will enable you to keep moving forward without getting stuck if you're a lower income earner, and then just being relevant with it as well. It's always strategic. It's always strategic movement, right? But movement's key. It's always if you're able to keep moving forward.
I'm going to come back to this. Actually, I'm going to jump straight into the strategy part because you've just dropped it there. I had something that on it for a bit later, but when I hear the number like 80, what is it? 80-90% of investors don't get past 1 or 2 investment properties.
I believe 92% are 2 or less.
Here we go. And they go, oh mate, they bought the wrong assets. I sometimes will question that because I don't think if you bought a few years ago and across the country, it's done well. So you can't tell me that they bought the wrong asset. Just the whole market lifted. From my experience, what I see is they don't actually have a very clear game plan. Like they've never been shown a way to go, mate, but once you do that, and then that, and then that, and what we call a roadmap internally, they've never been actually given a roadmap by either a lender or a broker. You can't expect that from a broker. And I'll tell you why. Because a broker is paid a commission to do a deal, to do one loan and to get it to approval and then to settlement. Yep. The missing piece is up front, which is the strategy piece. Yeah. So many clients will come to us and I'm like, yeah, I will charge you a strategy fee because we're paid a comms just to do the loan. For sure. And the only reason that brokers will then take you on is because they're going to refinance your whole portfolio to get paid for hours worth of work, free work they're giving away. But the knowledge and IP that sits right at the very front end is the strategy roadmap. And how are we going to strategically unlock the equity? At which points do we unlock how much equity and drip feed it here? Then go into the sequencing and order in terms of, okay, you want to get that work backwards on the portfolio goal. And this is not blowing any smoke because I know obviously the brokers that you work with, buddy, put through the ringer in terms of show us how you're going to scale the portfolio. This is what we're doing in terms of our strategy. So someone working with the wrong broker, you've been around a fair bit. You've been around brokers for a long time.
Long time.
What are some of the red flags that people will hear to go, I'm on the wrong path or with the wrong broker? And then what are the green flags that you're looking for when you're working with brokers to go, here's how they're cut from a different cloth?
I'm going to touch on one thing before we jump into that.
Please.
I think the 3 things that stop people the most from getting beyond that 2 property. First one is the strategic piece. Second one is the first piece you spoke about just a second ago around buying the wrong property. I do think there are a number of people that do buy it. And even if they buy the wrong property, that doesn't allow them to continue to move forward from servicing. They might have the growth, but the cash flows might be terrible, right? So they might get stuck with that. So those two pieces go hand in hand. And the third one is the very first thing we spoke about, which was not having the mindset to get past it. You get the three of those things right, genuinely nothing can stop you. If you get the three of those things
You'd
right.
have no reason to stop.
Exactly. Exactly. So that's where I think people need to really focus on understanding all three of those components and putting time into learning it, because you'll get to a certain point genuinely, and this could take 5 years, could take 10 years, where your portfolio could be making you $1 million a year in growth or more, right? And I actually got to the point as a low income earner that my portfolio was producing that. I'm not talking a Fugazi, if someone making $1 million a year builds a huge portfolio and they get that. I'm literally talking about building a portfolio that can generate that on an average Australian income, right? If you tick those three boxes we just spoke about, you can get there 100%, right? To then answer your question, which is fundamentally one of the most important things you can do, which is selecting the correct broker to partner with. You got the ultimate trifecta when you go to buy properties these days. I don't believe the average person can do it themselves anymore. I think the market's way too hot. I think way too much transacts off market. And I think way too much transacts off market at the wrong money, at way above market, because people think it's good value because it's off market when they don't understand market value. So the right team from a buyer's agent perspective, you have to have a great broker or you'll cap out, because 99% of brokers just want to clip ticket, move on, get the deal done, move on, right? Do a refi if they can, lock you up as much as they can so you can't move forward. Perfect, right? That's exactly what they want. And then the accountant, obviously, for obvious reasons outside of that as well. They're the golden trifecta, right? The core fundamental ability to move forward is being able to access money.
100%.
If you cannot leverage and you cannot get access to debt, it's game over, And this is where so many people do get stuck at one or two properties because they don't understand that piece, or they just have a broker. You can get approved for this, go buy a property at $1 million, buy it, done. There you go, one property, and they're done, right? Because there was no strategic game plan around it. So I can't understate how important can't overstate how important that is to get that right from the very outset. Again, losing momentum, you probably never come back to it if you don't get this piece right at the start and you get knocked out of the game. Because momentum, excitement, confidence, all that stuff at the very start, you want to keep building on that and allowing it to grow. Now, in terms of the green flags that are probably the most important things for me are how many investors has this broker actually moved beyond the top 1%, right? So 5, 6 more properties. How many investors have they actually got to that point? How big is their team? How capable is the team of it from that perspective as well? And how many properties does that actual broker own themselves? I think they're a lot of the time, they're quite prudent questions to ask, because I think someone that has nothing to hide, and the thing you've got to understand, actually, this is probably one of the things, you and I love this stuff, right? Absolutely. And a lot of the brokers that I work with, we love it. Yeah. There's no one broker that can probably handle what we do as
absolutely not.
So we have to work with others, right? But I think the really crucial part here is like we love property investing. Yeah. So if I probably give the biggest green flag is, do they love property investing? Are they an investor themselves? Have they been buying for in excess of 5 years, or how long have they been investing for? And then again, how many investors have they moved to a serious point as well? Because what I find is the brokers that genuinely love investing and they have a real passion for it the way that we do as well, they want to figure out how to get people to big positions and to keep growing. Like, the only thing that still gives me goosebumps and actually gets me excited is a client messaging me going, hey man, I just made, like that example before of, hey man, like I'm up 400 grand last year. I ate shit for a month because a bunch of stuff popped up, but I made 400 grand in a year, and it gave me a reality check of how good this shit actually is, right? Like, that's the only stuff that can still give me like these goosebump moments. Because almost every goal I've ever, especially financially chased or materially or whatever, I've hit them all, right? So it's like, it's these little things that are actually real genuine experiences and moments. They're the things that still give me juice. Yeah. And so I think, man, when you are like deeply passionate about what we do, about the game that we're in, man, it shines through, because you can't hide, you can't fake passion. You know what I mean? You either have it or you don't. And so I feel like that for me is almost always the biggest like green flag that I would look for from it. I don't want someone that's just like, I guess some people call me maybe a little bit, I'm outgoing. Yeah. I'm probably not eccentric. I'm outgoing. Right. But I like to work with people who also have good energy with it and want to push hard. But if someone's pencil push, so I probably wouldn't vibe with them that well. But like someone that is outgoing, wants to push for it, and actually push to help you achieve what you want from a not in a gung ho way, but in a way that's like a sustainable way to let's get you to your goals. You know what I mean? So like those components shine through, man, because you need energy at the end of the day, man. you'll go through tough times with this thing, and you need partners in there that go, mate, this is part of the process. This is part of the game. And that needs to come from all those three key partners I was talking about before. And then you need to cultivate it yourself as well. That's how you get there. You don't build the portfolio that will get you to your goals and to your dreams by having no drive with this thing and working with a team that has no drive. They need to have all those components as well.
Really well said, mate. It's I say to anyone, sometimes I'll balk because I charge a fee, right? Yep. A strategy fee. Now, not everyone on my team from a client broker side, but you're going to get the result. And when I'm breaking new ground, they're like, dude, this is different to 99% of brokers. I'm like, yeah, but we don't work like the 99% of brokers do. Yeah. And I said, mate, a BA could put the 5 best properties that you could buy today right now.
Yep.
How would you finance them? I'm not putting your balls in a vice grip on purpose. I'm just saying we need a partnership where we can work together to get that result, that we're going to build that 1% property portfolio that changes the game, and it's a few dollars up front. Like I know at that point, they're not serious enough about it. It's like going to a PT and going, I'll only pay you if you get me these results, but I'm not willing to do the calorie tracking. I've just started with a new PT, bloody calorie tracking, bloody taking photos of this, weight measurements every week. I was like, dude, he's like, yeah, this is what you wanted. These are the results that you wanted. And I'm like, and it's the sleep. It's like what you're saying. It's the sum of the parts, man. You can't just choose which part you want to invest in and which part you want to delegate or abdicate. You got to go all in on this thing, all in. And when I've seen people that have gone all in on it, I'm like, they come back, like you said, 12, 18 months later, and the conversation is elevated to the point. It's like, we've created a beast. Like between you guys and the stuff that we do, like we've created some monsters.
100%.
They've gone from going, I'm not sure about taking $1 million worth of debt and buying an area that I've got no idea about, to then going, when are we going again? Let's pull that next one off the shelf. Let's go again. And I think when you talk about having that impact, and you talk about like it gives you that drive, impact. I don't care about, I haven't looked at the bottom line. I don't care what we get paid each month. The impact that we're having, this ripple effect while we're doing this, it's going, we want more people to win in this game.
100%. Mate, I'll be dead honest with you. I haven't looked at the bottom line for you. Because I know if we do our job correctly and we get the clients the results that we know we can get them and the things that move their portfolios forward, man, the amount of repeat referred business, we don't advertise. I've never spent money on social media. You know what I mean? Like it's the results are going to be there. You don't need to look at it, right? And if this is all that juices me up anyway, I don't really care regardless. So just to touch on one thing you said, which I think is probably the easiest way to sum up what you just said, is talking about a fee for service and, paying for something that, there's two things here. Paying for something that someone doesn't know. So you don't know what you don't know, right? And to get access a lot of the time to what you don't know, you need to pay for it, right? But also, it's not what something costs you, it's what something makes you, right? So I've had people, clients that came and they were like, man, I don't know about school or property. Like, I feel like I've got a 10 property portfolio. I feel like I know enough. I was like, that's all right, man. You don't need to do it if you don't want to do it. And they're like, oh, you kind of put me off now because like you're like so confident in this. I'm like, man, if we were at the same level, you're exceeding me as an investor, then it's like, okay, maybe you do know more than me. Maybe you weren't learning anything out of this thing. But I'm like, but if you learn one thing out of this that unlocks the ability to do one extra deal, which is realistically probably one extra deal a year, how much is that going to compound in terms of what it is? And I've had clients that like just sort of said it to me offhandedly, like, oh man, I'm not that sure. Especially when it wasn't mandatory like 2 years ago when we first brought it in, which obviously it is now because we want all our clients to be highly educated because we just know that's what gets them so much further.
The conversation just goes up
level. So much better, man. And so I had a few of those chats, and these were seasoned investors. But obviously, there's only a certain amount of time that the guys, even that have been with me for years, can still get access to me, especially when we go through things. So they'll come to me. I'll tell them about different things that I would do in the portfolio. I'd look at this. We look at different markets in and out, all the rest of the thing. But then when they sit through that, and it's my brain dump of everything I've learned over the last 17 years, and then they get to look at that and apply that actually against their portfolio, and then pull the actual the intellect from the education piece, and then overlay it on their portfolio that they're obviously going to know better than me. Then all of a sudden they call me or send me a text going, "Yeah, man, I ate my words a little bit on that one. Man, I've realized we could do this, and now we're unlocked and we do another 2-3 properties, in the next quarter." And man, the simple fact is you don't know what you don't know. And there also a lot of the time is a cost associated with getting information that you don't yet have access to. And for me, at the very start, probably I would even say the first 5, maybe the first 10 years, I was very, I was very loath to spend too much money on education. I was always trying to penny pinch, and that was just my style. I was a tight ass, I always have been. And I'd never really wanted to. And I took the long way around of learning everything that I did. Now, I'm grateful for what I did learn and the time it took me to learn of it, because it made me very humble because of the amount of shit that I ate for a very long period of time. And it's made me very humble in that sense. And I'll never, talk down anyone, put down anyone on that, because I've just been through what a lot of people have been through as well. A lot of people forget that I worked on a farm for 14 years before I started doing what I'm doing full time. You know what I mean? I invested the whole time frame, but labor on a farm for that long.
It's humbling.
Yeah,
Man.
it is, man. It's humbling. It's humbling. And so I think, man, like if there was one lesson I could go back to 19-year-old Sammy Gordon and say one thing, it would be find a mentor that has done what you want to do and pay them what they ask to get that information. Because once you have that information, I probably could have cut a 10-year journey down. I look at how long I get a lot of my guys, and you've witnessed this firsthand, from 1 deposit to 5 deals. A lot of the time, that's a 2-year sprint. That's a 24-month injection of pushing. But you got the right hand guiding you. You got the right brokerage partner getting you the money, the right everything in that environment. Man, it took me 7 years to get my first 5 deals. I'm getting for these kids in 24 months.
Great.
You know what I mean? And so it's like, you don't know what you don't know. And pay for the guidance that will get you to that piece, because otherwise, man, it just goes back to you don't know what you don't know, and you also don't know what's happening on the ground in a lot of locations. These people trying to save their money on it as well. That's why now I literally look at it and I'm like, it's virtually impossible to go out there and do this yourself. We've had clients that have signed on the last few months. We've recently reopened our books. They're like, man, we were looking in that market for 12 months. I was like, well, imagine if you bought in that market 12 months ago, this is 25% worth of capital growth. You know what I mean? But they understand it after they go through the pain. And so often the greatest teacher of lessons is pain. You will never remember something more, or remember the thing you shouldn't do if it costs you a significant amount of money, or it causes you a lot of pain, or them both combined.
We're going to come back to School of Property.
Okay.
I'll come back to that in a second.
All right.
But you talked about that, talking to yourself all those years ago.
Yeah.
And I listened to a really good podcast with Marcus Chiminello. He's an agent down in Melbourne.
Yeah, right.
So it's top end properties.
Yep.
Sounds like a good dude. But he has a really good analogy that the plane uses a lot of its energy
You lift off.
to get off the ground. And that's almost the start. We're saying those first couple of deals are the hardest, right? Who to trust, buying in areas they don't unsure about, or they've missed out in, trying to do it themselves, spending a little bit as well, trying to get this lift the plane off the ground.
Yeah.
How do you speak to someone going, I hear and see you, but once you're up in the air, you go, mate, welcome to first class, and here's a beverage of your choice, and we're here at your service.
Yeah.
How do you tell these people, man, strap yourself in for this hardest part? Because it's easy, because you're probably at a high level altitude and cruising.
Mate, the easiest way, and you're so right, man. You're so right. Did I buy 30 plus properties a year these days, right? Easily, every year for the last 5 years, 4 or 5 years, this sort of thing.
That'd mate, that some people couldn't get their head around it.
100%. But now for me, it's autopilot. Deal comes in, team executes, boom, boom, boom. Everything, it's just like, and a lot of the time, most of my deals are also big renovators, or at least half of them are big renovators. So I either first enter a market and buy like a bunch of the stock when we first enter, because I always like to cut my teeth on an area before anyone else goes in there. But then I also buy the big renovators who come through an area we're established in, but I don't want to put it onto a client because it might be too hairy, but it's got a nice uplift. But if 1 in 5 of those blows up, it's blowing up on me, not on a client, right? So I just prefer to take that risk and put it on a client. But for me now, that's just normal. It would be weird for me to not buy 30 properties a year. That have been for the last 3-4 years. And I think it's purely because my mindset now is I understand the opportunity of not doing that, right? And so if the opportunity is there and we were going to cut that deal that otherwise would have gone to a client, well, then I may as well just do that deal and execute that deal and reap the rewards. You know what I mean? So like we've been running like that, and I've been running like that for a while. And what I think is I'm sorry, I don't know how I segued exactly into that, but what I'm sort of getting at here is the first 7 years for me were extremely hard. By the last couple of those, I was getting to sort of like 2 to 3 a year. And then all of a sudden I hit this tipping point, and it was when I sold that first property. And then that tipping point came, and then I did those 2 deals, and then I was doing 4 to 6 deals a year. And I've never stopped buying at that sort of rate and that sort of ratio since then. And obviously since then, it obviously went through some big spikes as well. But that first 5, 6, 7 years was such a punish because I didn't know what I was doing, right? For one. But if I'd had the guiding hand on me, I would have pushed as hard as I could, but I didn't know how to do it. But when you get to a certain point, there's a tipping point that does come. And when that tipping point comes, and it normally comes when you start your first round of consolidation in all reality. So you might struggle your way through the first, 4, 5, 6 deals, and then you clip 2, and all of a sudden you're like, whoa, the first 2 that I equity leverage.
The LVR's down at 50, 60%.
Exactly.
Maybe.
And I've got 400 grand sitting in the bank account.
Yeah.
And now I can go pay cash deposits on 80% lens on these deals. And then all of a sudden it's just like this injection and you go to this different level. But that first window to get there is typically a struggle and it's a push. The reason I gave my example at the start is because I probably went through it a lot longer than a lot of other people, but I've hit this huge tipping point now. And again, 17 years in the game. And this is just me as a professional investor now doing what I do. But everyone's got to remember that first 7 years was an absolute punish, right? Most people now could get that down to 2 to 3 years and they probably don't even sacrifice the level I did. But even like a bit of a sacrifice period for a 2 to 3 year window, minimum 12 months. You do minimum 12 months, you'll get yourself your first 2 to 3 properties in the portfolio, scrape your way sort of through that thing, and then get yourself to your third one, and then it becomes a lot easier after that. Because when you've got 3 properties, every 90 to 180 days, there's a deposit being spat out that you can work with, right? And I think people need to understand and embrace, and it is very relevant to everyone's individual situation, that it could be 12, 24, 36 months of hard graft. But then I promise you, after that tipping point comes, the game becomes easy. And that's why like everyone knows the first deal is the hardest because you got to save that first deposit. But when you get to that point and that tipping point comes in, and yes, the tipping point might not mean you're doing 30 deals in a year, right? But the tipping point might mean now it's really easy to do 3 to 4 deals a year. And that could be $1.5 to $2 million worth of property every single year you're injecting into the portfolio. But you have to understand that start point has to come for you to get there. You have to earn that right. No one has a God-given right of being able to do 3 to 4 deals a year. You have to earn that right, yeah? And getting past 2 properties, getting to your third property and beyond, everyone who gets to 3 and beyond should give themselves a pat in the back because they've done what 92% of investors in Australia, not Australians, investors in Australia never hit. So give yourself a pat in the back when you get there. But then when you get to 5 and 6, like that's where the game just becomes a completely different level. It's so much easier. To answer your question succinctly, because you asked me, how do people get through that piece? Expect the worst. Expect the worst and everything's fucking easy. Literally. Because if you expect every tenant to be a nightmare and they're not, guess what? When one little thing comes up, you're like, oh, I thought it was gonna be heaps worse than that. Yeah? When you expect these things, when you expect your broker to be a punish and they're actually mad to work with, when you expect these people to be hard to deal with, but then it's good, or like a little thing happens and you work collectively to fix it, everything becomes a lot easier. And when you stop looking at everyone as the enemy, and like this is a thing where a lot of the time people start and they come in and they just think everyone's out to get them, or like everyone's out to get a clip. No, just the best people charge for their service. But you got to remember the best people, if they're guiding you and their team is guiding you, they're going to fast track a 7-year journey down to 2 and then help you get to these sorts of levels that we're talking about. And there's nothing more powerful than having the right team on your side. And I've experienced that personally. Dude, it was 7 years, till I found the right broker for myself and the right accountant for myself. And that's where everything flipped after that. Because no broker told me to sell something. And so everyone's just like, no, you can't do anything. You suck. And then I met my broker and they go, you need to sell something. I was like, wait, what do you mean sell? You never sell. It's Australia. No one sells property.
Correct. Buy and hold forever.
Well, you can either be stuck or you can sell something. And then I figured out everything after that point. I started really formulating a strategy. It took me about 6 months to properly get convinced to do it. And then I did it. And then the rest is history. So man, I think it's one of those things. Expect the worst, plan for the worst and then embrace it, man, push. And then you just find it gets so much easier.
Mate, I'm trying. I know that's similar for a lot of people, right? Because it's a lot for some people to take in. Obviously, we do this daily. Yeah. So we're so much closer to the action, right? In my mind, as you're talking, I'm trying to imagine 14 years ago, a young Sammy Gordon, right? No podcast, no YouTube.
17 years ago, man. At 19, when I bought my first one.
Anyone that's listened to your story knows that you picked up the Smart Property Investment magazine, which is gone, by the way.
They're all gone.
Yeah. We used to post those out to clients. When I first started broking, I used to order 100.
Yeah.
They come to our office every month, a box. We just stare at these going, we're going to stuff these in envelopes. Office here in Hunter Street, Damien, Bertie and I would be stuffing these envelopes because we knew how invaluable they were.
For sure.
Just something tangible to read. Mate,
that's where I gleaned almost all of my information from.
I was going to ask you, so I'm trying to ask you,
learning period.
Where did a young Sammy Gordon
get
all this info from?
Bro, that was it. So I picked up that first
magazine.
And
they're a lag metric because they're printed 2-3 months ago to then hit your desk today.
Yeah, for sure. Ages. Massive lag metric. But they were critical to what I did. And the reason I'm so passionate now and the reason I'm so bullish in the way that I invest as well is I had so much time out of the game because that was my only learning source. And like now, like the podcast that we listen to, the information that we provide and other people
it's
provide
almost
in the
a
industry.
double-edged sword, which is there's too much information, man, to filter through. Whereas you had one magazine, it was not a single source of truth.
There was a lot of different variations, you know what I mean? There was a lot of people in there touting, you know, buy and hold forever, and there was other people touting
buy
developments,
new,
everything, 100%.
I remember that. I remember like I could tell you the exact company as soon as you opened it up.
They're on the front and they're on the back
The
page
first two
as well.
pages. I know. We've had them on, you know, previously. And it was almost like these guys are spending too much on money on advertising. Almost went the other way, going, are they for real? Because they're spending a lot of money on advertising, and you know, you want to find the small little guys in there, or guys or girls. So even then, you had your antlers up for who's trying to sell me something.
For sure, man, for sure. And dude, I got burnt by that. So someone that I read in there for a long time, that was massive, you know, especially in the 20 teens, who was really well respected, and falsely so. He just spun a story exceptionally well. He's not big anymore. He's barely. He's still he's grinding a living now. But man, he was massively respected, especially by our generation, you know, and in their 20s. And then man, I got burnt by him 10K at 26. Again, you know, these lessons are what you learn massively from. And I gleaned so much information from it, and I built myself a 7-property portfolio at that time. I think at 25, 26 or whatever it was. Got burnt with it, and then sort of realized the fugazi that had been pulled over my head. But
you almost need a bit of that, bro. You need to be taken advantage of. I don't think we've ever spoken about it publicly, but Bernie and I went to one of these big rah-rah events, right? Yeah. And there's a guy that came out from the UK, and he had a big portfolio over there. He's like, man, get into a mastermind.
Yep.
We'd started a business, so this is over 10 years ago.
Yep.
$25,000 investment.
Yeah.
And we raided the bank, and we're like, man, take the money. Like, well, you know, they'll literally help you set up a portfolio, do rent to buys and all this stuff. Like, oh, perfect. Disappeared.
No.
And that lit a fuse me, going, man, I'll never take advantage of people.
Yeah.
Like, play with the straight bat. You never have to look over your shoulder. Yep. We chased them for probably about 2 months. And I said to Bernie at that point, we came home and we looked at each other like, just let it go. No lawyers. Don't even expect. Just let it go.
Yep.
And we'll make it back tenfold just by doing the right thing. Yep. So yeah, I hear when you say that. It's
I'm exactly the same, man.
It stays in you, not to get bitter about it, but you go, it molds you to go, I never want that feeling for someone else.
Yep. I mean, as a saying, I love that you say there around the bitter side. You heard the saying, obviously, don't get bitter, get better.
Oh, my brother's got it on his bloody wall.
Is that right?
Absolutely.
Yeah. I'd forgotten about it for years, and then I can't remember who I was with, and someone said it to me recently about another company that had an issue with us, and because they haven't changed their strategy in 30 years, and I'm just like, you know, there's a reason why all these guys fall away, because they don't change with the times of what actually works, you know, especially in a newer day and age. And he said it's funny, man, like, I don't understand why they don't just get better, they stay bitter, you know. And it's funny, it rang around in my head, and it was. Yes, it's a funny thing when you sort of look at other people, especially when they're having pot shots and stuff at everyone else. Like, man, I don't even listen to anyone else's stuff anymore. I haven't listened to anyone else's stuff for years. I don't take notice of what anyone says. People send me shit that other people do in reels. I don't even watch their stuff. People send it to me, and I don't even acknowledge the message, because I'm just like, I don't care. Like, I don't care. What we're doing works, and I believe so wholeheartedly in it. And I know if I watch something else and there's something said about me, it'll trigger me and I'll go ballistic. So there's no point. I just know myself now. There's no point, you know what I mean? It's just going to throw me off, and that doesn't serve anyone. It only serves them, because they got the reaction they were hoping for. I mean, if anyone wants to debate me, I'm more than happy to jump live against anyone and debate anyone.
I will talk to you about this later.
Let's do it.
Georgia, we wrote down something before.
But
I got a couple points. School of property and something else for you.
Nah, easy, man. And I think it's just like, that's how I roll by, because I just know if I buy into all that side of things, it's just gonna you know, derail me, which it doesn't serve anyone, right? So, man, I think and just drilling back to what you'd said as well, same thing happened to me. Man, I wasn't going to, you know, pull the money out that I needed to from a legal perspective to try and chase this guy. I knew that the headspace was going to take from me, and the money, I didn't have. I built the portfolio really well, but I was like, is it going to be worth it from that side of things? And then what I realized is the further on that I went, and then 12 months after that, I decided I was going to become a buyer's agent. And then 12 months after that, I started the buyer's agency. And what I realized was in that 12 to 24 month period, I just realized that was going to be the fuel, that was going to be my fire, was going to be to overtake this guy and was to like crush him as a BA in the industry. And man, it worked because he kept doing what he was doing and I kept operating, exactly as you said before, straight back, wanting their best for people, always taking ownership if we ever stuff anything up. And I think, man, when that's the way that you operate, regardless of the size that you get, if you have a diligent due diligence process internally, valuation steps that ensure deals are at below market value and what we say that they're worth, man, we're able to operate effectively, efficiently, and get the best results. And so like I built my business in the exact opposite to the way this guy had done his thing, because I knew it would give the result that would have people coming back again and again and again. And it took me a long time to sort of build it and get it to the point where it is now.
That's a bloody juggernaut, man.
But it's funny because you look at him. I remember I walked into his office. This was been 10 years ago. I was like Wolf of Wall Street, man. Like it was like a call center. Like it was hectic, and it just didn't register. I was too, I think, young and naive at the time to sort of realize that piece of it.
Spot on.
And then I sort of look at it now and I'm just like, man, it's but again, it's the lesson we're talking about before. The lessons that hurt the most and the lessons that cost the most teach you the most and put you on the right path. So
I think it goes two ways. One is you really get stuck in the loop and you get stuck in the hole and you get bitter. That's correct.
Yeah.
And you'll just get this rhetoric to yourself that you can't trust anyone. For example, one bad person is just like one bad relationship is then, put a chip on your shoulder, or you just go, I got paid a bit for that bit of brain damage, but on my watch, it's not going to happen again.
Yeah.
And you could choose to flip that into a lesson. I think the ones that do just go, yep, becomes part of my scar tissue, part of my DNA.
Yep.
We've made a mistake and we're not even going to pursue it. It's dead.
Yeah.
It's gone.
Yep.
And you got to then cut your losses and move on pretty quickly. Same thing happens in property. Like I've even seen there's people that I bought properties a few years ago that are selling them at break even or in some areas for a loss.
Yeah.
At least they're selling them. They cut their losses. They move on and they might move on to something that's a growth asset, for example. It's like there is something admirable about that to go, mate, we didn't make the money we did. Cut it, move on. Let's try a different tactic as well. There's something big about that. Man, I spoke about School of Property. I want to put you on the spot here because what I'm willing to do, we've had a heap of clients, obviously mutual clients, go through.
Yeah.
I bought, everyone knows that, I bought through you, like our team have as well.
Appreciate that, man.
And we always get big raps around School of Property. I'm willing for anyone listening to this, if you drop us a DM, we're going to Georgia's our marketing manager, you're going to go through the responses we get, Georgia. If you can write in and say, look, what you've loved about this episode, I'm willing to put one School of Property. I'll pay for one membership.
Is that right?
Absolutely, man.
I'll match it.
You will?
Yeah, I'll match it. I'll do someone else for free as well.
Here we go.
There we
Thanks,
go.
man.
Done.
Generosity.
Because that was unscripted, by the way. That was, he pulled that shit. That's why he said he put me on the spot.
Bro, this is why I had it here. I didn't want to give you the script beforehand because I had it here. I said to Georgia, I'm like,
done.
This is not for clicks or anything. It's to go genuinely. There's some people that might be, cutting it fine.
Yeah.
And we've been there.
For sure.
So we've all been there at the start of the journey, going every dollar matters.
Yeah.
I hear it. I want to see where you are, Sammy. You're going to see someone else where they are and meet them halfway on it. You got to commit.
100%.
You're going to commit. And on our watch, if I'm going to put my money where my mouth is, and so are you, we want to see people commit.
100%.
And I think a small investment like that is going to give us massive dividends as well. I appreciate that, man. It's big of you.
No, man, I'm pleased. Likewise, man. Likewise. You didn't expect it? I'm glad I can still keep you on your toes, mate.
So what we're going to do is we'll put some mechanics around it. I'm genuinely to say for School of Property, it is a self-service platform. I mean, you talk about self-service education. I've done some research around this. 90% of people will enroll in a course and never complete it.
Yeah, that's crazy.
It is crazy, right?
It is crazy.
That's why you got to pay for it to value it.
I agree.
You can't give it away for free.
For sure.
Yeah.
For sure.
So if you're interested, mate, drop us a DM. Tell us why you want it. We'll go through and we'll pick out 2 winners and announce that. I really appreciate that, Phil.
No, of course, man.
Thanks, man. I'm excited. Likewise. To see what people think because it gives us opportunity. Kind of listeners that are a little bit passive and we don't get a chance. Like that's when they probably reach out and to you guys. I get a kick out of it.
For sure, man.
I get on the phone like it's you. I'm like, dude, of course it's me. I get a real kick out of people that are. Some people are across the waters, mate, international, across the country.
Yeah.
With technology, our paths would never have met, and now they get a chance to our worlds collide and get to see what they're doing. Genuinely lights me up when I see what people have been, just hungry. Like people that are listening, driving trains and listening to this for hours.
Man.
Like you're listening to me for hours, man. Come on,
crazy.
Put a playlist on, like a 50 Cent or something on, But like, no, I've worked through this podcast. I'm like, they're talking about property podcasts I've never even heard of. I'm
for
like,
sure.
Dude, I'm
That
glad,
much time to kill.
I'm glad it took you 2 hours, 2 years to reach out to us. You know, it's bonkers.
Man, I'll tell you what, I was going to kick, just to touch on that, I was going to kick out of, I get random people come up to, you probably get the same, right? But like airports and stuff, like when you're flying around and moving stuff. Man, I love it, man. Like, because I work very independently. I've always been a bit of a lone wolf the way that I work. I don't work out of the office or anything. I don't deal well with a lot of stuff going on, like chaos in an office sort of thing. I just like, well, you think about it, when I'm an office man, there's always someone coming in trying to talk to me about stuff. And so I work heaps better by myself, right? And so I typically don't, like obviously interact a fair amount, but it's not like I'm like always moving around everywhere sort of thing. And so it's always funny when I'm like at the airport or flying somewhere, or especially when I kind of go on location and different things as well. Man, I was with one of the BAs down in Melbourne for the F1 the other week. One of our boys, Paulie, and we were just going for a walk, man. He wanted to take me down this main street in Toorak. Apparently, this is beautiful. I barely ever been in Melbourne, right? We're walking down there, and this random client does a Yui, comes back, pulls over, like, hey, Sammy, Paulie, jumps out and starts chatting and stuff, man. Like, I get a kick out of that stuff because, like, obviously the online, the DM stuff, like, it's cool. But I think like it's really cool when you meet clients in person. They come up and say good day, and they realize we're just normal blokes. You know what I mean? They've just done all right with what we do. But I love that, man. And they come up and they say, it was like that story of the dude with the 400K that they'd made and stuff. And they have these equity releases like, oh man, you bought me, we're 4 or 5 deals in, I've made this and buying this. And I just love it, man. That's what I get a massive kick out of. I absolutely love that stuff.
It is, isn't it? And these are people just passing the street.
For sure.
I love that whole kind of, I call it stealthy wealthy, man. Like there's a bunch of our clients just walking around stealthy wealthy. No one knows what they're sitting on. It's the wealth that you can't see. I love it, yeah. I mean, obviously I'm big on that. I'd say health is number one.
Yeah.
Yeah. I look at anyone's portfolio. I'm like, man, your physical, mental, spiritual, whatever health, put that number one.
Yep.
Yeah. The biggest portfolio, bigger health problems. Yeah. Nothing matters.
See you later.
Yeah. Good relationships. Sure. People think that the wealth is built in the asset selection. I'm like, no, it's just part of the equation,
Yep.
I think you need to have really good, healthy relationships, especially if you're investing with a partner. Yep. You got to get on the same page financially.
Yeah, remember we spoke about that last time.
Maybe we did. Yeah, a number of people, I got Bernie on a podcast, and then so many people just connected that because that was almost like a fireside chat in terms of how we manage our own finances. And then I think the other part is obviously physically you take care of yourself. I think anyone that you see do well is taking care of their body and their mind. Yep. Yeah, big time, those relationships. The money comes off the back of that. Like you invest in yourself. That's why the School of Property, you got to spend a few bucks, invest in yourself. Do a course, do a personal development course, do something that's going to move the needle personally. Don't put all your eggs in the property basket because that will do some heavy lifting, but your career and your income also has to do some heavy lifting as well.
I find the interesting piece of this is now some people, they grow up with drive because of their circumstances. I think I was very much, thankfully, a beneficiary of that component. But everyone has an opportunity regardless of where they are, whether they're overweight, they don't have money, all these sorts of things. What I find is when someone makes a change in this stuff, one thing, whether it is the wealth position, whether it is the health position, whether it's, trying to actively get better at relationships, whatever it is, right? When you try and genuinely fix and put the time into and actually think about what you're doing and how you could improve that and get better at it, then all of a sudden you start looking for the other avenues of how do I get better at this or that, or how do I, maybe I should start going to train, and I think as what I see a lot of the time as well, when people start to make good money out of their portfolio, they take a little bit of a foot off the steam of the career, which sometimes they were driving so hard and flogging so hard and no time with the family, not looking after themselves. All of a sudden they start to realize I'm not a passive investor, but almost like an actively passive investment model that they can do on the side, still create hectic wealth, but then there's more to life than just hammering the career because it's not the only way to make money. And I think, we see this a lot of clients then start to look after themselves, saying that everything's improving, from all those different perspectives as well. It's the thing, I think, okay, one of my favorite sayings is how you do anything is how you do everything.
We spoke about this.
We have. And man, I think this is like, if you start to commit to trying to be the best at everything that you can do, it flows onto everything because you can't be a beast at everything in your life and then just be shit at like a couple of things. It's very rare because you're a high performer. You evolve into a high performer, which floods across everything because you won't be able to accept being shit at these other things because you're so good at the others. Like you'll be conscious of it, So man, I'm a big believer in it.
I love it. Got a couple of rapid fire questions for you. That's cool.
Let's go.
You touched on it before. First property purchase price.
275.
Nice. One suburb or region investors should be watching right now.
one suburb or region.
Yeah.
Oh, that's a tricky one. Now, you know what? I have openly been bullish about this recently on this side of the year because so many people are openly against it. And I'm very pro Darwin at the moment.
Lauren, actually, we got to hear. She was going to ask you the question later about it's going to, because I know you don't openly discuss location. For
sure.
I don't want to take the conversation there.
For sure. But man, I know it's supposed to be rapid fire. Dude, but it's a funny thing.
Yeah, no, it's
well, it's an interesting component, right? Because so many people. Yeah, it is. And so what I find polarizing is people continually harping on for the same investment strategy for 30 years that is as broken as, you know, a car on fire on the side of the road. It's that broken and just doesn't work anymore. This idea of just continually buying blue chip, continually buying the same suburb. Oh, well, it produces 7 to 10% average over the last 10 years. It's like past performance is not a proven indicator of future performance, right? And so, you know, all these people that are still banging on about this stuff or areas that have done 15% capital growth over the last 10 years, because, you know, Brisbane's done a boom in the last 5 years. Like, it's like, man, this stuff, it rattles my cage, man, because I get so pissed off about it because it's just so mainstream thinking and so sheep and so herdy. Whereas something like what we're talking about in this scenario, and man, people shit-canned Rockhampton, they shit-canned Mackay, Townsville, all these areas, Gladstone, man, they've all done 150 to 200% growth in the last, like, minimum. You buy anywhere in 2021, 2022, any of those areas, any property in there has doubled in the last 3 to 4 years, right? Let alone if you bought well and you bought in the right suburb and you bought at the right time, you'd be close to 200% up, right? And so, man, I just massively challenge the belief around that sort of stuff. And it's just, that's to me is passive investing, but it's the most dangerous, risky investing that there is. Because if you know what you're doing on the other side, that's where the money truly is made. And man, like, you're barely beating inflation with that, if you even are at all, right? So man, when I really factor all that into the equation, and this is where, you know, and you didn't, like we said, you didn't run this script past me before this thing and like how I was going to run it. And I was going to mention it, but I'm just like, I've spoken about it a little bit lately as it is.
You've been open about it.
But dude, there's like $40 billion worth of projects in the pipeline in close proximity to Darwin. It's 140,000 people. 70% of the population is government employees. It has the second highest income in the country with the lowest house price by a country mile. There is massive supply deficit. They're not building anywhere near enough homes. They've just raised the 5% first home deposit scheme. You can't even really buy a house at that money. Like, it's already almost past that as well. Man, it's just, there's so many driving factors behind it. It has one of the tightest vacancy rates in the country and falling. And man, it's just, you know, you compare it to almost every other capital city in Australia that's running at a 2 to 3% yield at the moment. You can get a house with between 5 to 6% plus yield. Man, I'm just like, if there was one area that I would talk about, it is hot there now. It is hot there, and I think you need to be extremely selective with how you buy and where you buy. But yeah, man, it's one of those areas I think people shit canned for a very long time. It started to turn last year. It was the second highest housing market performer over the last 12 months. But if you look at it, and I was talking about this with Equity Mates boys this morning, Perth was the only capital city that outperformed, did 22% the last 12 months. Darwin did just under 20. But Brisbane, Perth, Adelaide have all exceeded about 100 to 150% capital growth in the last 5 years. Darwin has just done its first 12 months of 20%. More, higher incomes, lower house price, better rents, better vacancy rates, tighter vacancy rates than all those other cities combined, with more projects and the highest infrastructure spending per capita in the entire country. I would love to eat my words in 12 months if I'm wrong. And I'm happy to go challenge against any of those guys that are calling it that it's going to be shit. But if it isn't the highest and the strongest performing housing market in 2026, somewhere has done exceptionally well. Somewhere else has done exceptionally well, because I really think it will take the cake again this year. So I think it's a funny thing, man. Like, I'm always willing to sort of put my money where my mouth is and go up against anyone in any of this sort of stuff. But yeah, man, I think it's one of those ones. It's making me laugh that people are talking it down, because they did that about Perth too. And if you bought in Perth in 2021, when we entered in 2020 and 2021, you would be up pretty close to 200% in that time frame.
Easily.
5 years.
Easily.
And everyone
Probably
said,
more.
don't buy there.
Yeah.
You know? So yeah, man, let the masses go follow the herds.
Right, so let me ask you one question, which I get pretty regularly around this location. Man, is this a pump and dump? Because they're going, man, the amount of groundswell of investors coming in, Do these BAs actually have this ability to sway a market, come in here, pump up prices, and then tell the investors to exit? And who's then going to buy these properties because there's not a lot of owner-occupied demand? That's what we hear.
Yeah,
that's what we hear.
Do you know who we get outbid by on every house these days and have for the last 3 to 6 months and actually have competed with for the last 12 to 18?
I can say other BAs probably.
Owner-occupiers.
Yeah, right. Okay.
We are almost always outbid by owner-occupiers.
There you go.
Yes, there's
I would
a
have
lot
thought
of
other BAs.
Man, there are a lot of other BAs in there that pay big money as well.
Yeah.
But man, owner-occupiers in there are savage. Like, why is the vacancy rate shrinking? Because owner-occupiers are buying more of the stock. So, man, we're literally seeing that play out at the moment as well. Yeah, wow. Yes, there's other BAs and other investors that'll pay big dollars. But, man, like if the market goes, like I don't see anywhere producing a dollar figure or a growth rate perspective over the next 3 years. I don't see another city that will do what Darwin will do. I genuinely don't see it. And the run that's in the tank, like the affordability metrics based on incomes of the areas, man, they're massive in comparison to any other. Show me another city in Australia that's got the same income to house price ratios. Show me another regional town above 20,000 people that has as strong income to house price ratios as Darwin. There isn't one because I study every market in the fucking country, right? So if that's a capital city with $40 billion worth of infrastructure spending going on in the region, a capital city at that amount with 70% of the, or 60+% of the population being government employees, show me how it doesn't work like that. And man, the fact that the owner occupiers are a massive dominant force in that marketplace, man, there's so much fuel in that fire. And again, I don't normally talk about locations, but man, it's going to send. It is sending now. It's gone through its first phase. But man, it's funny. Like I pulled out of markets too early in other locations and regretted it. It's a thing, right? Like if a market's going to do 100 to 150% worth capital growth and you miss the first 30%, would you still buy it 40% in? If it's still going to do another 60 to 90, you would, right? Or 60 to 110, you would, right? So I think it's really understanding where it's going to get to. But I think the big thing to remember is $40 billion worth of projects. That's a lot of people moving to an area. The big thing that we found when we went and got in the ground, I've been Darwin four times now, myself personally. They all love it. They fucking love living there. They say the NT gets in your blood, right? You don't want to leave. They come there for like a defense contract for 3 to 5 years, and then they've been there for 20 years. They don't leave. I think it's a big country town in a way. It is very much like it's a very outdoorsy sort of place. But dude, we were trying to find a podcast studio, couldn't find one, and then we found a penthouse. It was the only penthouse in Darwin, right? And because I had a few mentoring clients that were up there, and we rented this penthouse. I was up there with Kel and I, the producer Kel. She's getting everything set up, and I'm recording with this guy, and we just see with Nathan Caitlin, and we just look over and we can just see this the afternoon storm just coming in, and they're all just like, yeah, we love those storms. And they're sitting there going, look at that, it's the best. And you can just see the front of it, you see the back of it, comes through, wipes out all the heat, everyone's loving it, everyone's out having a good time. I don't know, man, like they love it up there. And that's why, like, when everyone thinks it's purely investors and BAs, it's crazy the level of owner occupiers. And what everyone forgets is the people that actually push it past to the top point, because investors will tip out when yields get to a certain point. Owner occupiers will go till they run out of borrowing power, right? So they run out of actual spending money. They push it further than anyone else because yields won't allow them to go to a certain point too. So, man, I'm a big believer in it. I think it's got a lot of juice in the tank, and yeah, man, I think it's going to be really interesting to watch. I think the same as what Perth is, where it's funny no one brings up Perth now. Of like, it was going to be the shittest place. I don't throw daggers at people, but there were that many people that were saying that Perth, don't touch Perth, purely mining, resource. Man, it's still sending 5 years later, 150% up. It's still sending. It was the highest growth market in the last 12 months. You know what I mean? So I'm more than happy to eat my hat. Maybe we'll make that a bet. If it doesn't do 20% capital growth this year, we'll cook a hat up on the show and I'll eat the hat. All right? If it doesn't do at least 20%.
I'll get some chimichurri sauce to go
with
it,
mate. There we go.
All right, cool.
Just to throw it out there.
Mate, we've had some bold claims made recently. Bold claims, buddy. Emil Jurassic said he's going to sell his house. He's like, well, next week, my buddy, his Instagram story that his house on the market. I was like, holy shit.
Yeah, that's crazy. Yeah. That's crazy.
Yeah, I mean, that's a different
He's a different
story.
cat.
He's a different beast altogether. Biggest mistake investors make in a rising rate environment.
Holy shit, I forgot we're still doing rapid fire. It took me 10 minutes to answer the last one. Sorry, what was that one?
The biggest mistake investors make in a rising rate environment.
Not buying.
Cool. is property investing about patience or aggression?
Strategic aggression. Patience only needs to come in if you can't afford to buy right now, right? So I would always be aggressive. If I got the ability to buy, I'll always buy, but it's strategic. It's not just like, I'm just going to go out and buy, 20 properties or whatever. It needs to be strategic. But I think patience only needs to come in if you can't actually make any other moves and you need to sit there, and everyone hits a wall. I think I've hit walls, I think maybe it was 3 or 4 times in my journey in total. And they're painful, right? And it's hard, especially when you've got runs on the board and you've got momentum and you're building. But if you can't get money, like sometimes that's just what you got to do. And we always want to look at like what levers can we pull in the game right now to actually make something happen. But if the best thing to do is sit and wait for 6 to 12 months for a market to mature and a property potentially produce another 20%, which could be another $100,000 worth of capital growth, if you really need that, which most people do, then yeah, man, sometimes you do need to be patient. So I would say both, but if we were to pick one over the other, it's strategic aggression.
Love it. What separates investors from those who succeed versus those who have failed?
The mindset piece we spoke about earlier, the trifecta team, that golden trifecta team of BA, accountant, broker, you have to get that piece right. You don't get that right, you'll get stuck. I don't care how educated you are in it, you'll get stuck. Not taking action is the next one. So analysis paralysis, you could be the most educated person in the world. Jim off the side of the street who bought one deal in Perth 5 years ago will crush you, right? Or even if he'd bought something anywhere in Australia 5 years ago, he would have crushed you. You could be the most educated investor in the world. If you get stuck with analysis paralysis and do not execute and do not buy, the most average investor in the world will outperform you.
If you lost your entire property portfolio tomorrow, what would you do to rebuild?
Take a trip up north. Get it in the blood. What would I do if I lost the entire portfolio? Yeah. Man, I would strategically assess my position. Do I have cash? Do I have borrowing capacity? What does that look like? And then, man, I genuinely would make the same game plan that I make for my clients, and execute in that same way. I would look to scale the portfolio as quickly as I could whilst managing cash flows. It would probably also depend how much I was making. So myself, when I was younger, below average Australian income earner, I would work time ahead and bank a week's worth of work and then like a week's worth of leave. And then I would, on a Thursday night, drive 14 hours to bloody Adelaide or 11 hours straight to Brizzy. I'd sleep in a tent at the back of a house and then I'd renovate it for 8 or 9 days. And then I'd leave on a Sunday arvo, drive 10 hours, 11 hours back, probably get back for an hour or two's kip in the morning and then start work again that next Monday. So running like that, if there's no other options, it's like, what can we do? What are the absolute non-negotiables to actually move this portfolio forward? That is aggressive investing, right? So, but that is what moved the needle for me when I was younger.
Yeah. I think even if you said you weren't investing, or you said they got investment and someone lost their job and they had to rebuild and lost the marriage, financially ruined, had to start again, health issues, had lost it all, start again. Those principles would apply. You'd literally work your absolute guts out to rebuild as quickly as possible to get back on your feet, and then you can make some decisions about moving forward. Like you talked about that, like getting 5 hours sleep or going for a 10-hour sprint and working your butt. So that's where the business. I told the team now I did it now, so you guys don't have to run the business. But I'm like, finish at 2 a.m, get up at 6, back up again, roll it again, do it like that on repeat for I don't know how long they do it for, and then. There's that sweat equity at the start that then just compounds, like those actions, activities, everything just compounds in the background, stuff that they don't see. But man, just like that momentum's built to stuff that just done in secret. I think
that for sort of what we're talking about there, like the first thing to consider with that, if that was a scenario, is assessing your position, and then you can figure out what you have to do. If I had to do it again right now, I'd do it in half the time frame or less to get back to where I am now. I'm 17 years in. I reckon I'd do it in 7 or 8 max. And that's the same position I'm in now, which is a near 100 mil portfolio.
And you see people that lose their millions and they come back and taking half the time to get it back.
I don't know what the guy's name was. I remember hearing the story. I think Hormozy spoke about it. Someone spoke about it, and it was a business guy that was a billionaire. His wife took him for half, but because she took him for half, he had to sell everything. So what he had to pay in tax meant all that was left was half, which she got. Because it's not in a financial separation, it's not calculated on post-tax is calculated on net worth. So he had to sell everything off. So he went back to zero. And I think it was in less than half the time frame. He was worth twice, which I think was about a 7-year window. He was worth twice what he was worth when he was with the wife. You know, so the lessons that you learn when you go through all this stuff, man, it's like, that's the springboard, right? That's the complete force multiplier that you'll ever have in your portfolio, in your game plan, in life trajectory in general. That scar tissue you're talking about and those lessons. And that's why, like, when people ask about like the strategic piece costing a certain amount of money, it's like, well, you're investing to gain my complete knowledge so you get this result. You didn't do the 10 years that I did. There's a cost associated with it. It's that master mechanic that walks up to the plane and he charges $100,000, you know, for a 15-second fix. He's like, oh, sorry, did you do the last 40 years that I just did to learn how to fix that thing that you called me for? You know, it's like, and that's not being arrogant. That's you've earned the right. You know what I mean? And I think that's one of those, you've heard that analogy,
absolutely,
right? Yeah.
Absolutely.
And I think it's super prudent because when people are experts in their field, and, you know, I do this with other aspects of life. When someone's an expert in their field, if you have the ability to access that knowledge base, it almost doesn't matter what it costs, because if it can shorten your time frame from 17 years where I'm at now to 7, then man, it's nothing can compete with that.
I love it. That's why I love having you back on, man. It's like there's literally this energy that comes with you. It's like a fireball, man.
Appreciate it.
I mean, you call yourself the bull shark. Plenty of shark attacks around at the moment.
I didn't call myself the bull shark. I was called the bull shark. I ran with it.
And every week there's a bloody shark attack going on around the country.
There's a few. I've been hungry.
But I call it like a fireball, man. There's an energy that comes with it. And I think it just brings people on that journey going, mate, strap in. You really want these results. There's people that will talk about it. And you'll hear them talking about it a few years later going, I wish I could have done that or should have done that. And there's others that are just getting on with it, playing the game. And their future self will thank them for decisions that they're making today. And I just want to leave that there for that to kind of simmer in the air a little bit. We made a very generous offer probably halfway through the podcast. If you are listening and you want to take action, and the only way that we can give you to take action is to then go, right, I want to get into School of Property, drop us a DM. Sammy and I would put 2 memberships on the line here. We want to hear from you guys. So there's enough kind of listening and being passive. There's another thing to kind of grab it by the horns and be active as well. So if that's you, drop us a DM. George and I sit there, go through all these responses as well. I'll pick up the top 2 and mate, we'll open those doors, and we want to change your financial future. If it starts at this very point, this moment right here, we're going to sit back, like you said, in 12 months' time when you're hopefully not eating your hat. And we've talked about some of the results that you've had.
Yeah, we'll see.
I don't think just a good chance to reflect, mate. But you're always welcome, mate. We love having you swing by
man.
as well. Told you, mate, when you're down the gong, get you in the office as well. That's a wrap. So
man, you know what? I'm going to throw out one final thing, man, because something we did on Scouting Australia a few weeks ago. I wasn't even thinking about this till the offer that you just made. Man, because the same thing with us with first timers, right? Because I understand there's a barrier to entry when you're first starting out. And so we did a first timer podcast around, it was about 3 or 4 weeks ago, like how to get into the market for your first deal. And man, on that, you guys would have heard me mention a couple of times Fugazi in this thing. Now, the code word, if any of you guys are interested, is Fugazi. But we have it was purely on that podcast episode. And I'm only dropping it right now. So unless someone listens to the very end, they won't actually hear this. But if you use the code word Fugazi, we've actually got a first timer discount on the line at the moment. First time, so if you've never bought before, right, and you're getting into your first asset, man, it's our little way, because I know you said before, like there is that barrier to entry side, and we fully acknowledge that. And yeah, man, so we've got that on the table at the moment to help, especially those first timers, man, get into the market. Because I know it's hard getting into your first deal, but if we can help people get into their first property and really start that journey, because you get the right deal, man, and you get that first property and you get it correctly, the rest is history, mate. It takes care of itself. So,
like we said, mate, that first you unlock it, it's the hardest one. The second one gets you going, and then after that, like you said, third puts you in the top 8% in this country. For sure. Got to tell you, mate, the grass is greener once you get past that 3 property mark. And like they're like, oh mate, are these guys full of it? No, the grass is actually greener on the other side. There's
the
more.
Snowball is real, man.
It is. It is, mate. Sammy, I love it. Like always, if you love this episode, share it with a friend. Like I said, we don't really. George will say we want subscribers. I'm like, just share the episode with people. Because
I'm pretty sure the follow button is right next to the share. So
is it?
If you're going to share, you may as well hit subscribe or follow at the same time before you share.
Here we go. I'm just displaying my ignorance, man, because I spend very little time on social media. But George will see to it. Let's subscribe, let's share, let's follow, let's do everything.
Everything, man. Everything.
But we want you to comment and drop us a DM, because I want to give that away and I want to change someone's life So does Sammy. So, mate, big ups
Let's
to
do
you,
it,
buddy.
brother.
I
Thank
love
you,
the
man.
energy.
Appreciate having me
As
on.
always, mate, thanks for tuning in. We'll talk to you next time.
If this episode has got you thinking about taking the next step and building a property portfolio, we'd love to have a chat, and you can book in a strategy session call with our team. Check out ateliawealth.com.au. Thanks very much for listening to our podcast. Make sure you like, subscribe, or follow on whatever platform you're listening to as well, so this episode comes straight to you. We release a new episode every Monday morning at 7. We'll talk to you soon.